Evening, guys. As promised, we said we would follow up after the Nebius earnings release and also on Coreweave. Quite a lot has happened. There hasn't been just earnings releases. We've had further concerns over an AI bubble, and the prominent Michael Berry has been shorting Nvidia and Palantir. Plus, large banks warn of an impending market correction. Firstly, let's start with the earnings release on the 11th of November. We've decided to wait and see the market reaction to results, as we are not really a stock picking or tipping channel, but we're trying to facilitate better financial thinking and to educate. AI stocks have been taking a bit of a battering throughout this earnings season, regardless of how good they've been. So we wanted to see the price action off the back of the earnings release that might not necessarily directly relate to the results. I mean, the quick take from the results is huge revenue growth. Nebius posted a 355% year-on-year revenue increase to 146 million and announced a 3 billion 5-year meta deal and reiterated its hyper-aggressive capacity plans. Shares fell on the day as revenue missed street expectations and losses widened on a gap basis. I mean, the story management wants you to hear on guidance and capacity is that the run rate revenue goal of 7 to 9 billion ARR by the end of 2026. There's also a power roadmap targeting 2.5 gigawatts contracted power by year 26. I mean, our view is that they're excellent results. There has been a sell-off in AI and plenty of stocks have fallen after decent results, as indicated. Double beat from Palantir, sell-off. You know, we've been here before in this modern AI rally. Ultimately, the revenue currently looks low for a market cap of 20 to 30 billion. There's so much future success baked in, but at the same time, a market cap of 20 million when there's the Microsoft and Meta deals worth 20 billion, in a crude way, suggests that the market is behaving irrational towards its stock, based on a wider sector concern. I mean, two main concerns are that the company sold out of capacity. I mean, it actually said we sold out of everything we built. That might sound like kids on a lemonade stand, but no, that is what a CEO of a major Nasdaq tech company said. The company also missed earnings forecasts with losses widening 153%. You know, even though these big tech deals are music to investors' ears, you know, the market will be prudent to consider whether Nebius can actually grow profitably. It's okay scaling up, but if you're scaling up and you're not doing it profitably, then your company has problems. But as we've said before, we're not believers in EPS or PEG or PE ratios. We use FCF as a valuation metric, and there's no cash flow at this stage. Big concern is the dilution in shares. Company announced at the market share sale of 25 million shares, so potentially diluting 10% of value for existing shareholders. You know, ultimately this is a trade-off for holding a rapidly expanding company. Whilst not ideal, companies that grow need capital. Capital's not free. You know, you can issue bonds, you can take out standard loans, or you can do rights issues and issue equity. That's what they've done. But yeah, ultimately what is music in the ears is the annualised revenue rate guided to be 7 to 9 billion. This shouldn't be confused with the annual recurring rate, which is to do with more of a predictable subscription-based model. It is really just a projection of future annual revenues. I mean, conclusion on the results is if these results occurred 2 months earlier, the stock would have flown 30% up. So, yeah, I won't worry too much about the market conditions at the moment. The company's operating well. Compared to Coreweave, Coreweave revenue is 1.36 billion. There's still a gap loss, but it's got a larger near-term scale than Nebius. It is a larger company. It's got a backlog of 30.1 billion. Nebius is, you've got these mega deals that are somewhat in the future. So yeah, it's a bigger company. We'll do a bit more of a deep dive in a video on the financials of Coreweave and Nebius. There's a suggestion that Coreweave, burn cash far quicker than Nebius does, but we can't go over all of that today. Michael Berry and the AI sell-off. We all know Michael Berry is, he made his name shorting subprime mortgages ahead of the 2008-2009 economic crash. A story that became the basis for the movie The Big Short. Now in late 2025, Berry is turning his attention to what he claims is a speculative mania in artificial intelligence. He's taken short positions, 1 million Nvidia shares shorted worth 187 million. And then 5 million Palantir shares worth, just below a billion. Essentially, he's warning that there's been mass capital expenditure by tech giants on AI infrastructure, but uncertain returns, so more of a general point. But he also thinks there's a bit of accounting trickery whereby lifespans of AI hardware are being stretched to 6 years from 3 years, so the depreciation spread out. You're buying the item over a longer period of time, so there's less expense going against turnover there. Therefore, profits are artificially boosted. And also there's circular investing problem whereby AI hardware also invests in AI firms. They buy services from them. So there's intertwined relationships where, ultimately valuations may be disconnected from true cash flows. So they're looking at, could this be, he's suggesting, and maybe the market concern, this could be the next .com or housing bubble. Look, if you keep calling these things, eventually you're right with one. He was right in 2008, but he's not really managed to replicate that many great shorts since then. But boy, does he nail that one, making hundreds of millions, equivalent to billions now. It's one of the greatest set of trades in the history of markets. Interesting point on Berry is also that he's closing his fund, Scion Asset Management. It's not clear why. We assume his positions will remain open, given the recency of the news release of him shorting Nvidia and Palantir. Berry might just be setting up a family office and continuing largely the same. So that's unclear at this stage, but what he's actually doing will become clearer in the near term. Looking at the brokers, not too much movement from them just yet. There's been lots of upgrades off the back of the last set of results, and the average price target sits at $142. We've got a top target of $207. There is some loose media discussions about the stock hitting $450 by 2030. On the price action side of things, again, we won't do too much detail here. I think the stock's too volatile really to look at technicals. I don't think if you get a big sell off in AI and people believe Berry, then your weak support and the base of your technical indicators aren't going to offer too much prevention in things sinking. And at the same time, if the market changes its mind, then it'll fly through the highs of $141. We've had a big pullback from 141 to 85, representing a 40% fall from highs. Conclusion, we hope there'll be a seasonal year-end rally and AI stocks go with it. It's not clear whether they will. Next earnings are out on the 16th of Feb. We will keep, will be more videos about this stock. This is the stock we're closely following the most. So we'll keep you updated on key risk developments and any big sort of deals that come out. Thanks for listening, guys, and if you could please subscribe, that support's greatly appreciated, and in time, it will help produce more of these videos. But really appreciate your support. Thanks for listening.